Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 29th of April 2020. And yesterday we published a video entitled Market Update, Gold and Silver Under Pressure, where we highlighted that equity markets were broadly up, but gold and silver prices had fallen during the week, with gold around $1,705 and silver at $15.11. Well, since reporting those figures, both gold and silver have strengthened a little, which we shall cover in a few minutes. However, we want to concern ourselves this morning, and we say morning because it's only 10:15 GMT plus 1. We wish to concern ourselves with equity markets and why they should not necessarily be written off quite yet, bearing in mind there is bad news ahead, economically speaking, some of which will be revealed later today as there is a raft of economic data due, including the important FOMC announcement and Fed Chairman's Jerome Powell's press conference after that announcement. So firstly, we'd like to cover with you two articles published by Bloomberg and then a look at what is happening to gold and silver prices. Bloomberg Article, dated April 29th, 2020. World's richest are waiting for new dip in stocks before buying. The majority of the world's wealthiest investors are awaiting for stocks to drop further before buying again on concerns about the pandemic's impact on the global economy, according to a poll by UBS Global Wealth Management. Among the surveyed investors and business owners with at least $1 million in investable assets or in annual revenue, 61% want to see equities fall another 5 to 20% before buying, while 23% say it's already a good time to do so. Some 16% say that now is not the time to load up on stocks as it's a bear market. High net worth individuals are cautious on risk assets as 60% say a global recession is highly likely to occur in the next 12 months, the April poll by UBS showed. Still, they remain largely positive about the long-term outlook. Sweeping lockdowns across major economies have shuttered businesses and sapped demand, significantly increasing the chances of recession this year. While equities have rallied more than 20% from March lows, they remain well below 2020 highs. Defensives have led the rebound, seen by some as a bearish sign, while the month's Bank of America Corp survey showed cash positioning at the highest level since the 9/11 terror attacks. The share of US investors that are optimistic about their own economy in the short term fell to 30% in the UBS survey from 68% in the period through early January. By comparison, about 55% of Asian investors had a constructive outlook. The positive 6-month outlook for US equities also slumped the most relative to other geographies. Quote, while short-term investor optimism across the globe has dropped significantly, levels seem to align regionally with the pandemic cycle, said Paulo Polito, Divisional Vice Chairman at UBS Global Wealth Management. In Asia, where the COVID-19 crisis and mitigation occurred earlier, investors appear to be slightly more optimistic about their region's stocks. By contrast, optimism appears lower in the US, which is currently experiencing an apex in the crisis, unquote. Almost half of the poll participants do not plan to adjust their stock holdings, and 37% plan to invest more, whereas only 16% are decreasing their investments. UBS surveyed 2,928 investors and 1,180 business owners between the 1st of April and the 20th of April. End of article. Stocks mixed, US futures advance, dollar drops, markets wrap, Bloomberg. Dated April 29th, 2020, 9:42 a.m. GMT plus 1. European stocks fluctuated while Asian shares gained with US equity futures as investors count down to more big earnings a Federal Reserve policy decision, and key American economic data. The dollar fell for a third day, and oil advanced. Declines for healthcare shares offset gains for oil companies and insurers in the Stoxx Europe 600 index. Barclays plc jumped, with the lender reporting a surge in trading revenue. Nasdaq futures advanced after Alphabet Inc. posted better than estimated sales. That took some of the focus off Tuesday's sell-off in mega-cap tech stocks, including Amazon.com Inc. and Netflix Inc. Shares in Sydney outperformed while they also rose in Seoul, despite a warning from Samsung Electronics Co. that profit may fall in the second quarter as the pandemic hits demand. Japan is shut for a holiday. Now, Italian sovereign bonds slipped after Fitch Ratings downgraded the nation's assessment one step to BBB minus, that's triple B minus, just one level above junk. Treasuries climbed. The dollar slipped against most of its major peers for a third day. WTI oil futures rebounded after plunging 27% in 2 sessions. Money managers have their focus divided between the Fed policy decision, the US gross domestic product report, and earnings from General Electric Co., MasterCard Inc., Microsoft Corp., and Facebook Inc. At the same time, traders are monitoring coronavirus infection rates and the government discussion underway on how to restart activity, with hard-hit nations like Spain saying they need at least 8 more weeks to fully undo its lockdown. Quote, "We have some very extreme readings on the blow we've just suffered, and markets are still bouncing around trying to get a reading on where we will be in the third and fourth quarter," unquote. Christopher Smart, Chief Global Strategist at Barings Investment Institute, said on Bloomberg TV. Continuing his quote, "That is very hard right now without knowing where the disease will be and how quickly people will feel comfortable going back to work, going back to stores between now and when there might be a vaccine," unquote. With earnings season in full swing, more companies are cutting jobs and throwing up their hands over future guidance. Based on results through Tuesday, earnings for European companies are headed for a drop of 30% in the quarter, according to Morgan Stanley, which said expectations are similar for the second and third quarters as well. Elsewhere, South Africa's rand and the Indian rupee led a rally in emerging market currencies, which were headed towards their best daily gains versus the dollar in about 3 weeks. These are the main market moves. Stocks, the Stoxx Europe 600 index fell 0.1% as of 9:37 a.m. London time. The UK FTSE 100 index climbed 0.7%. Futures on the S&P 500 increased 0.8%. Nasdaq 100 index futures jumped 1.1%, and the MSCI Asia Pacific index gained 0.8%. Currencies, the Bloomberg dollar spot index decreased 0.3%. The euro advanced 0.4% to $1.0868, and the British pound advanced 0.2% to $1.2445. And the Japanese yen strengthened 0.4%. Bonds, the yield on 10-year treasuries decreased 2 basis points to 0.59%, and Britain's 10-year yield fell 2 basis points to 0.269%. And commodities, West Texas Intermediate crude gained 11.7% to $13.78 a barrel, and Brent crude advanced 2.4% to $20.96 a barrel. We'll now have a quick look at gold, but this is the end of this article. While the time is currently 10:23 GMT plus 1, and we can see in the top right-hand corner that in sterling terms, gold is £1,372 an ounce, and silver is £12.25, or in gram terms, £44 for gold, and roughly 39 pence a gram for silver. Now, in dollar terms, gold is $1,706 and silver is $15.24. Now, if we take a brief look at how that compares with the market opening this week, you may be aware that markets closed on Friday in sterling terms at £1,397, And as you can see on this chart, it fell quite significantly on Monday, rose a little on Tuesday, and now Wednesday morning is sort of oscillating, waiting for, quite frankly in our view, the FOMC and other FOMC announcement and other economic data due out. Taking a quick look at gold in dollar terms, obviously a similar picture. Started at 1729. It's been, the previous week it went as high as 1739, but 1729 fell again, rose, and is now currently oscillating around that 1706 level. Silver, on the other hand, in sterling terms, really, I suppose it's best to say duplicating what gold has been doing, perhaps a tiny bit more drastically, but not significantly in terms of the down, but then recovering much better in the last few hours. So started the week at 12.35 and is now currently £12.25, and in dollar terms, as we can see, started at 15.28, is now 15.23 at this precise moment, so is recovering quite nicely really from a dip well into the 1490s. So we're having quite an interesting oscillation, which is what we predicted in our weekly update on Saturday. Just while we're on the page, just a fascinating look at Bitcoin. And if we look at Bitcoin in sterling terms, we can see it's £6,409, and in dollar terms it's 7,971, in fact at its week's high. That's the end of this section. So this morning the dollar has slipped, gold and silver prices have risen slightly, oil is up, and Asian and European markets are just about in the black, in other words in positive territory, overnight and this morning. Now this week, as we've stated, is an important week for data and information, and we highlighted what to look out for in Saturday's update. And the video we produced on Sunday, entitled Central Banks Reporting and Economic Stimulus Measures, links to both of these are in the description box below. We pointed out that there is a considerable amount of information that traders and investors will have to digest and interpret this week. Suffice to say that although we ourselves are not rushing into the equity markets right now, as we have no doubt there is worse economic news to come, it is interesting to see from the Bloomberg articles that larger investors are now ready to dip their toe back in, either currently, at the moment, or not that far into the future, perhaps waiting for one more dip before they commit. This is a sobering thought for all of us who are part of this gold and silver collecting, stacking and investment community, that even in the midst of a crisis, financial systems are so intertwined and developed and frankly dependent on each other. It's not as simple as an equation as crisis equals stock market collapse anymore. We believe that precious metals at current spot prices are very good value with a very limited downside and quite a significant upside. But those higher levels will not be reached by a vertical straight line, but gradual trending up curves with the slight dips in between, arguably presenting buying opportunities. For as we stated in yesterday's video, it's going to be a long and potentially tortuous road to recovery. But they will be in recovery. The question, of course, is, will it reach those levels prior to the crisis? We think not, and certainly not for some considerable time to come. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting, we update our Richard and Greg channel every few days, and we have an interview between Journo Marcus and controversially Greg, which will be going up later today. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.